You hear the term death tax, and it just sounds scary, right? Like it's this inevitable thing. There's this common fear that the government is just waiting to take a huge slice of whatever you leave behind for your family. But is that fear really justified? Let's separate the fact from the fiction, shall we?
So let's just get right to it. This is the big question, the one on pretty much everyone's mind. When someone you love passes away and leaves you something, is Uncle Sam waiting in the wings with a tax bill? It's a totally valid worry.
Yeah, I can put your mind at ease right away. For the vast majority of people in the US, the answer is a simple, straightforward no. You're probably not going to pay any federal tax on the assets you inherit. So let's all take a collective deep breath and talk about why that is.
Okay, so here's our game plan for this explainer. First, we're gonna bust that death tax myth wide open. Then we'll dive into the huge federal exemption that protects most of us. After that, we'll finally clear up the confusion between estate tax and inheritance tax. And you're gonna wanna stick around for this one. We'll talk about when you can actually refuse an inheritance. Yep. Finally, we'll touch on some smart planning for those with larger estates.
All right, first up, let's get this myth sorted out. The idea that every single estate gets hit with a big tax bill is honestly one of the biggest misconceptions in personal finance. The reality is, well, it's a lot less dramatic.
Just look at this number, $13.61 million. That is the federal estate tax exemption for a single person in 2024. Let that sink in for a second. An estate has to be worth more than that before the federal government even starts to think about taking a cut.
So here's the bottom line. We are not talking about your average family home or 401k here. The federal estate tax is designed, on purpose, to only apply to the wealthiest of the wealthy. And on top of that, the vast majority of states don't have any kind of estate or inheritance tax at all.
So that giant number is the headline, but how the federal exemption actually works is just as important. The protections it offers go even deeper than you might think. Let's get into the nitty-gritty.
So there are a few key rules to wrap your head around here. First, even if an estate is worth, say, $14 million, the tax is only on the amount over the line, not the whole thing. Second, assets are valued at their fair market value when the person dies. And these next two are huge. Anything left to a surviving spouse is completely exempt, and any money left to charity gets deducted before any tax is calculated.
Yeah, that rule for spouses is a really big deal. It has a fancy legal name, the unlimited marital deduction, but all it means is that a husband or wife can leave any amount of money or property to their spouse completely tax-free. The government might only get involved way down the line when the surviving spouse passes away and leaves that combined estate to other heirs.
Okay, so the federal picture is pretty clear for most of us, right? But this is where things can get a little confusing. We're talking about the state level. And it's time to untangle two very different taxes that people tend to lump together.
Okay, let's get this straight once and for all. An estate tax is paid by the estate itself before the heirs get a single penny. The federal government has one, and so do a few states. Now, an inheritance tax is totally different. That one's paid by you, the person who's receiving the assets. There's no federal inheritance tax, it's a state-only thing. And a key difference is that estate taxes depend on where the deceased person lived, while inheritance taxes can depend on where the heir lives.
And here they are, the states that have them. As you can see, it's a pretty short list. About a dozen states and D.C. have an estate tax. Only 6 have an inheritance tax. And yep, you're seeing that right, Maryland is the only state that has both. The really important thing to know is that these state exemption limits are much lower than the federal one, sometimes starting at just $1 million. And for those few states with an inheritance tax, there's another little rule. The tax rate you'll pay often depends on how closely you were related to the person. Spouses are pretty much always exempt. Direct kids usually pay a very low rate, if anything at all. The highest tax rates are usually for distant relatives or friends who inherit.
Now, let's get into a really fascinating part of estate law that most people don't even know exists. You can actually say no, thank you, to an inheritance. It's a formal legal process called a waiver or a disclaimer.
I know what you're thinking. That sounds nuts, right? Why on earth would you turn down free money or property? Well, it turns out there are some pretty smart and strategic reasons why that might just be the best move you could make.
So why do it? Well, maybe inheriting a bunch of money would just push your own estate into a taxable situation down the road. Or maybe you're inheriting a property that's a total money pit and you just don't want the hassle. And this one's a biggie. If someone's going through bankruptcy, they might waive an inheritance to stop creditors from just swooping in and taking it all.
Now, you can't just tell the executor you don't want it. The process is really specific. It has to be a formal written document, it has to be filed with the right court, and the executor needs a copy. But here's the most critical part. The clock is ticking. You typically have only 9 months from the date of death to file this waiver. If you miss that window, the inheritance is legally yours, like it or not.
Okay, let's move into our last section. This is really geared towards those lucky few whose estates might actually be large enough to be over that multi-million-dollar federal limit. For them, smart planning isn't just a good idea, it's absolutely essential.
For people with estates that are big enough to get taxed, there are a lot of common strategies. They might set up special trusts to hold assets outside of the main estate, or they could transfer ownership of huge life insurance policies so the payout goes directly to the heirs, bypassing the estate altogether. Another popular move is making strategic, tax-free gifts every year to slowly lower the estate's total value. But I gotta say, this is definitely not DIY stuff. This is hire a team of professionals territory.
So, after all of this, what's the big takeaway? It's that inheritance laws are complicated, they change a lot, and trying to figure it all out during what's already a super stressful time is just the worst. The absolute most important thing is that doing your homework and planning ahead is the smartest path for everybody.
So that brings us to the final question we should all be asking ourselves. Even if taxes aren't going to be your biggest issue, just having a clear plan is so incredibly crucial. Knowing these rules gives you the power to make the best decisions for your family's future. So, is your plan ready? It's a question we're thinking about.